Hey everybody, Side Gig Guy here. Today I'm going to talk to you in this video about side gigs that involve driving, because those are basically the only side gigs I do, driving side gigs. Things like DoorDash, Uber, Amazon Flex, Shipt, things like that. I'm going to tell you why I think these are some of the best side gigs for actually maximizing your earnings, giving you the most flexibility. But then, of course, I'm going to talk about the elephant in the room, the mileage deduction, and why using the mileage deduction helps you put more money into your pocket. People think that wear and tear on their car and gas is the biggest reason to avoid these kind of things. But if you're smart and you budget for it and you put money aside for every mile that you drive, you're going to be okay. And that's the purpose of today's video. And I'm just going to walk you through how I budget for Side Gig Guy and how I make sure that for every mile I drive, I'm covering my expenses. So let's take a walk and I'll show you how that works. All right, so here's how I like to budget my money when I do side gigs. I need to make $2,000 a month, so I plan on making $100 a day, 20 days out of the month. So that's where I start, with a revenue of $100. Now, how many miles I'm gonna drive, that kind of varies, but I like to guess that about 100 miles, or $1 per mile. So when I put those two numbers in, everything else kind of figures itself out. I know that I'm gonna pay about $7 in gas, because I get 50 miles to the gallon, give or take. By the way, 353 is just the national average for gas. That's what I used. My gas is actually cheaper. I'm gonna have to pay $5 in self-employment tax, and then I'm gonna save $39 for car repairs and a new car replacement, giving me a grand total of money to me of $48.66, even though this is my money too. My taxable income, $29.22. That's what I would pay taxes on. Now, for example, if I only made $50 but still drove 100 miles, I wouldn't owe any taxes, and I wouldn't have any taxable income. It'd be a negative number. And sometimes this number is a negative number. It just happens that you just drive, if you drive more than 65.5 cents per mile, which is the deduction, if you drive more miles than that and what you bring in, you're not gonna make any money on paper. This is if I had $100 in revenue and drove 200 miles. You can see it's kind of the same scenario. I have to save a lot more in that scenario too, because I'm saving 39 cents for every mile that I drive. 9 cents of that is for car repairs. 30 cents of it is for a new car replacement. Let me run you through an entire month. So like I said, I have a $2,000 budget that I have to have. So we're going to say that my revenue is $2,000 and that I actually drive 2,000 miles. Now, this formula works very well for me because I can save $780. I have enough money after that to still pay my bills. Gas expense, $140, as long as it stays under $200, I'm perfectly happy with that. And my self-employment tax is $105. Now, what normally happens is I end up driving more than 2,000 miles. I drive like 2,500 miles, and you can see how that lowers my tax burden, but it increases how much I have to save, and the lowers the amount that comes to me. If I were to really have a lot of miles, like let's say 3,000 miles, then you can see I stop owing taxes. There's no self-employment tax, or very little, $5. My taxable income for the month is only $29, so that's what I'm going to pay federal and state on, so I'm probably not going to pay any taxes there either. I save a lot more though. I save almost $1,000 because I'm counting it per mile. And that's important, to put money aside for your car repairs and for a new car replacement. The new car replacement is a hard one to get your head around, so let's just do a little simulation here. We're going to put what this would be if we drove 100,000 miles on the car. Now, if I drove 100,000 miles on my car, that kind of assumes that I'm going to get $100,000 in revenue. Trust me, that's not going to happen in 6 months or a year. It's going to take 2 or 3 or 4 years to get there. But you can see that after that period of time, I will have saved $39,000. And about $9,000 of that is going to go towards maintenance on the car. There's my money marked for the tax burden and how much money I would spend on gas as well. My net taxable income, and think about this, this is over a multi-year period of time, is only $29,000. So I might only be making $10,000 in taxable income that I have to pay taxes on to the state and federal government after my self-employment tax. So the main two things I want you to take away from this video are, number one, the mileage deduction for the IRS is very important. It's 65.5 cents per every mile that you drive while you're doing the side gigs. And sort of a footnote to number one for the mileage deduction, don't claim 100% of the miles that you drive on your odometer. The IRS expects that you're going to be commuting to work, even if you're a side gig driver. The only exception is if you take the home office deduction, and if you take that, it's one of the first red flags really for an audit. I'm not saying you're definitely going to get audited if you take it, but the IRS is going to look at that. So just have some miles built in as personal miles or commuter miles, whatever you want to call them. Don't just claim every mile that you drove on your car, or you're opening yourself up to an audit. And then number two, always put money aside for car repairs and car replacement. You can decide what you want to do. I do 39 cents. 9 cents of that is for car repairs. The other 30 cents is for car replacement. But you can do whatever number you want. Just do whatever works for you. It doesn't have to be, the 39 cents. That's my 2 pieces of advice, and I hope you enjoyed this video. Thanks for watching. Side Gig Guy out.